Trump likes to see the market reward him and to basically show their confidence in what he's doing, what he's saying. So I think that what we're hearing on the tariff front is that they're going to try to reach some sort of positive resolution where despite the threats that we saw in 2024, the actual outcome will probably be more watered down tariffs at worst. So I think we may get some more good news rather than bad news that keeps the rally supported in equities, that keeps the risk on appetite. So I think that's the way we're going to probably kick off the Trump term. And I think for the perspective of currencies, that means that those risk currencies may not fall as much as if we had really latched on to the severe tariffs that they were threatening on day one.
So, Kathy, are you saying that in the short run, this is what we are seeing is a dollar negative story, whether it's the implications of the Gaza ceasefire on oil and inflation perhaps coming down to a certain degree, less hawkish commentary on the tariffs? Is this a short-term dollar negative story?
Yes, I do think so, Shri. I do think that we are going to see a scenario where, a lot of the threats that we heard that helped to get him elected is going to be not as much of a severe negative effect on the economy and the markets as everyone had feared. So I do think that, for example, even though we do have ECB, not this week, but the following week, and we have other central banks looking to cut interest rates later this month, that we may see the dollar slide a bit before, rallies on FOMC week, and then we actually end up seeing a top in the dollar.
Kathy Martin here. Great to see you again. Hope you're keeping warm. So listen, let's get to the most important one of them all. That is the Fed. If this is what you're expecting, right, does that mean the Fed has room to cut 2 more times in this cycle or at least this year?
Well, we're just at the beginning of the year, Martin, right? And I think that we're minimally going to get 1 interest rate cut this year. The market went kind of haywire at the beginning of last week when it thought that it was pricing in 0 interest rate cuts for 2025. I do think 50 basis points is still realistic. I think that we're going to have below average returns in equities this year, even though we may have some initial enthusiasm when the President Trump's term begins. There's going to be volatility this year. There's still going to be a lot of geopolitical uncertainty that's unresolved, with China and Taiwan, with Russia and the Ukraine. And so I think that, we could still be in a scenario where traders do have to tread cautiously and the Federal Reserve may still have to deliver the 50 basis points of easing. But I think that may be it.
Gautam?
That's really interesting. And I think also, Kathy, it would be good to understand in terms of what do you think the potential is for inflation to ignite and just catch investors offside, and where do you think positioning is in the market for that?
I do think that is one of the kind of outlier risks that people aren't necessarily discounting because, as you see in the movements, what the Federal Reserve is predicting, they're still looking at lower inflation. You can see the reaction to last week's inflation report where the dollar fell, yields fell, that traders hope and believe that inflation is going to continue to move lower this year. I think that the overall strength of the labor market, along with, even if we get a small amount of tariffs, all of that could prevent a aggressive slide in inflation. But I still do believe, Gautam, that inflation is on a downtrend. I think that prices will end up falling, but probably not as quickly as the Federal Reserve feels comfortable.